Okay, so welcome to lecture 18, and in this one we're going to be looking at imbalance zones, which is another smart money concept. So what is an imbalance zone? Well, to simply put it, it is essentially where you get an imbalance between the buyers or the sellers at any given point in price, and it can be identified on the chart as follows. Okay, so what you're going to look for is you're going to look for a candle similar to this, okay? You see where the candle before, the top of the wick, and the bottom of the wick of the candle after don't intrude on the portion of the body here. This portion right here, where there's no intrusion on either side, this is your imbalance zone, okay? So you can mark it up from the top of the previous wick to the bottom of the next wick, okay? This zone right here, where there's a clear candle with no intrusions, this is an imbalanced candle. And what it means is at this point in time, the sellers didn't manage to get price to come back after this large pump, and we were left with an imbalanced segment of price, okay? And what it really comes down to is a bit more complicated. I'm not going to get too into the details now. I have a quick tutorial on it in my server, but what it really comes down to is the fact that market makers who are constantly buying and selling within a short range to make the markets, to give liquidity to the markets. So these market makers occasionally they don't get to rebalance their books, and this is where we can identify pockets where a sufficiently large buyer has come in and moved price to the point where the market makers haven't rebalanced the books. So what often tends to happen is a market maker or some entity will hope to see price come back down where they can rebalance for these imbalance zones in prices, and this is why we can use these imbalance zones as great spots for identifying, possible trade entries and possible trade exits. Okay, and so for this imbalance zone that I've marked out here, what is important about this is it's the first imbalance that's been created after price has broken out of this range. Okay, so this range that you see right here, you see prices moving around without creating any new highs. It's kind of choppy, not really much to work with. As soon as price has moved out of this range to the upside here, broken clear structure, we have a clear uptrend forming, we can see that we printed this imbalance zone right here that I drew up earlier, okay? And what we see after price has, had an uptrend, come back down, retraced, we see that price gets a perfect touch to rebalance price, okay? So price comes back down, fills the imbalance zone, or the FVG. This is also known as a fair value gap by some. The wording isn't too important here. So price comes back down, it fills our imbalance zone before heading back up to the upside and, potentially giving you the opportunity for a nice long trade off this. You could use the previous low of the consolidation as your stop loss, and you could target the high that we printed up here, and you can see this would have been a successful trade using this imbalance zone to find an entry. And what is also interesting about this trade is the fact the position where this trade ended, okay, so where this uptrend finished, this position is actually very interesting because, as we can see over here, we have an imbalance that was, the first imbalance that formed before we had a large impulse to the downside. So this part of the imbalance, the imbalance is larger, so the imbalance is actually this big, but we can see that it's been filled by these two wicks over here. So I'd point out the imbalance like this. Okay, you want to look for imbalance zones that haven't been filled yet, okay? These are the ones that prices are going to gravitate towards, okay? So you see how we have a small little imbalance zone over here. It is larger, but it has already been filled shortly afterwards. However, this portion remained unfilled, and if we see where price moved to straight after breaking up, straight after taking out this high, we can see it pokes straight into this remaining unfilled imbalance zone before coming back down after. So we're starting to see, price really does gravitate towards these imbalance zones, and it allows the market makers, okay, so the market makers are constantly putting in limit buys and limit sells into the market to make sure that you have somebody to buy or sell off when you make your trade, okay? So to give liquidity to the market makers get the chance to rebalance their books where they might have not managed to balance it before, okay? And if you go across many different time frames, if you zoom out to higher time frame charts, keeping imbalance zones in mind is a very important thing to do. If you print a strong imbalance on an uptrend move like this, you see you take out a new high, you can be all but guaranteed that a lot of this imbalance zone will be filled on the way down. And it's just something for you to, take into consideration when you're trying to examine the health of a trend, okay? So when you have an uptrend in price, what you want to see is imbalances getting filled, okay? So price is never going to move up in a straight line. It's always going to follow in waves, okay? And it's going to create the higher highs and higher lows. And what you want to see, okay, to form a healthy trend is you want to see the imbalance zones getting filled. Obviously, this isn't always going to happen, and you are going to leave some imbalance zones behind, especially on an asset like Bitcoin, which is, compared to the larger assets like equities and Forex, Bitcoin is still quite illiquid. So when you do start moving like we had here, these imbalance zones haven't been filled, and it's been, weeks since they have been filled, okay? Maybe in the future we do come back to them. If we do come back to these imbalance zones in the future, in the next year or so, I'll definitely be looking to buy some Bitcoin. In these imbalances here, it's just a great technical buy. It lines up with a previous support level over here, okay, and then you're getting into you can start to line up these imbalance zones with things we've talked about before. So for example, over here, okay, we have a breaker block that you see here, and this last candle before this upwards move here, it didn't act as support on the way down. So this is going back to the order blocks lecture. But if you draw this out, okay, so identify this as a breaker block, we can see that over here, price comes down to fill this imbalance. This is too large of an imbalance for us to try and pinpoint an exact entry, but using this breaker block alongside this imbalance, we get a really clear spot where price has retraced to and bounced right at this breaker block within the imbalance, okay? So we're getting to, starting to pull some of these concepts together, and that's what you want to do, okay? Having an understanding of each individual concept is great, but what you want to start getting into the habit of is, pulling these concepts together, looking for confluence. Okay, so confluence is where you have, more than one indication of where an entry might be. So it might be, pairing up an order block with an imbalance with a Fibonacci level, pulling it all together to try and get the most accurate representation of what you're expecting price to do, okay? And confluence is the key for that. And as we go through this course now, and we're getting into the final stage of the course, I will start showing you some trade examples that are going to start to bring together these concepts and show you how I really look to analyze the chart, pulling all of this stuff together.